Hmm. So what does all of this mean for Bitcoin and the move higher we saw, the violent move higher we saw yesterday amid forced liquidation and a short squeeze?
Yeah, so Bitcoin, I mean, the sentiment's been very low. The fast money has long since moved out toward AI names. And as we saw, I mean, even a fairly small move in price and in Bitcoin terms caused kind of record liquidations, which shows just how bearish the sentiment and positioning was. I think that, while this could be another false breakout. I mean, May, we saw higher numbers and we rolled back over to slightly lower lows than we saw in February. So I don't think Bitcoin's out of the woods yet, but I do think that by almost every metric, Bitcoin is near the low end of its valuation and sentiment range. Fast money's washed out. Strategy already kind of recapitalized its dollar position, so it kind of took that overhang of potential kind of further selling off the market for a while. There's really not a lot of downside catalysts for Bitcoin left. And even relatively small upside gains at this point can attract new types of buyers. Once people see that the chart doesn't look bad anymore, you can get technical traders coming back in. If you get further momentum, say months from now, you could get more momentum traders back in. So I think, with a multi-year time frame, Bitcoin is positioned here, both just fundamentally from where money is gone, but also from the dynamics we just talked about. Basically, that they're going to do some version of financial repression between the Treasury and the Fed, potentially alternating, and the ultimate beneficiary of that is hard assets that are underowned.
In terms of what could trigger some of those upside gains, at least in the nearer term or maybe even in the longer term for Bitcoin, I mean, should we be talking about the reemergence here then of, say, a debasement trade, especially when you see gold, for example, now surpassing U.S. Treasuries as the world's largest central bank reserve asset?
I think long term, yeah. I think some of these trades got ahead of themselves. I mean, last year, gold had that 2-year very strong run that culminated at over 5,000. Bitcoin briefly got over 125,000. Strategy was trading at, 3 times, its net asset value. And so things were heated. And I think that the correction was warranted across a number of these assets. But I think the long-term story remains in place that, when a country gets this indebted, there's various techniques to basically gradually try to inflate away the bonds. That currency itself is generally what takes the hit. And if you own scarce assets, whether it's high-quality equities or hard monies in this case, as long as they are not too over-owned or overbought at the time, they tend to be beneficiaries. And right now, I think Bitcoin's kind of near the bottom end of its cyclical range, which I think, looking back 2, 3 years from now, will be seen as having been a good buying opportunity.